Good afternoon, everybody. It is currently New York Open, so we are ready to get back to work today. It's 1:30 p.m. GMT. So we're going to go starting off with DXY. And as you can see from our daily time frame, we have this imbalance. I think it's on the 4 hour. And then we have, if you look at the 4 hour, you can see this huge displacement that's yet to be filled within this one candlestick in theories from here to here. But we've filled that already. And price, normally when it fills this, would reverse the other way. But I believe that price could potentially be heading towards this imbalance right here. So the two factors of price movement is the imbalance and liquidity. So we've taken already the liquidity that was rested above this high over here. And we didn't get that market structure shift I was looking for when it was taken out for it to take out these lows. Instead, it's kind of created liquidity down here almost. But in the hourly time frame, you can see that this is an imbalance. You see there's one right here. We filled this one, so let's move to this. And then we had a liquidity sweep over here as well. Equal lows taken out multiple times. Right here. So we've had that liquidity sweep, taking out the liquidity up here, liquidity down here. Up, down, which is fueling this push up into this displacement on the 4 hour. Or this, this displacement on the 4 hour. The 4 hour fair value gap. So we're bullish up until this point. We also have news that just happened, which is fairly neutral. For sell ideas, the daily is saying bit choppy, but see from this low to this high right here, the premium. So maybe we're bearish, yeah. I think we're short-term bearish at that point. So let's take that to these. So one of the mistakes we were making before was seeing every time frame as a different idea when the time frames are meant to coincide with one another, which is why it's important to start from the daily. So start from the daily. Just first get rid of this. We have Euro USD, which has been bearish. We've taken out 1, 2, 3, all these lows here. We have this swing low right here. Resting below this swing low is liquidity, which I think is the target for the price. So short-term bearish. We go back to DXY. DXY is short-term bullish. So we're actually against, for the dollar against every other pair. So if we go back, so we're against euro, that is a sell because we're for USD. We also have resting liquidity above here with these 3 daily equal highs. So I think price was going to go down to then go towards this. We then also have a fair value gap. Just going to change the color. Let's make it red. A deep red. Burgundy. So that's the fair value gap right there from here to here. And we have cleared it. I'm going to take that into the hourly chart. So this is the daily fair value gap. Where we filled it, pushed back up all the way to right to the top of it. And we now push to the downside. So let's look for some liquidity. So I'm going to go down quickly to the, just market open. And minute open. So up until this daily fair value gap, we are targeting these ultimate lows down here. Can get rid of these. This is our target. Over here. Why is our target? Because that's the swing low where there's going to be resting liquidity below it. We also have this imbalance over here. I don't know if we're at the midpoint of this 1 hour fair value gap. So we've basically filled this fair value gap right here, just that little gap. And so that normally would, that kind of gave the push to retest this daily here, the daily fair value gap up here. And we're now dropping. And that should be able to take us down here. So on the session open, we have pushed down a little bit, but we'll be looking for sells. So what we're going to be looking for now is equal lows, equal highs, and just looking for liquidity as a whole. We actually did have liquidity over here. Now create an equal lows here. Maybe even get like a scalp from here to here. Get that across. Smaller time frames. A bit cleaner too. Then if we broke structure over here. This is the leg of the move. I've got the values for the optimal trade. I think it's 6, 7 maybe. 3. So essentially, we're looking for a pullback this area to then sell these relative equal lows, which would be my broker, something like this. So that's the top-down analysis. We get the overall context. We get the idea. We form the only thing I will say is, though this is the overall target down here, if you remember on DXY, we are bullish short term and then bearish. So we have a target before a reversal. So going back to EU, we are going to be bullish eventually, but I think our bullish entries will start from here. That's my anticipation. Whether that happens or not, we'll see. But yeah, the price doesn't look like it's slowing down at all. Yeah, that will be our posture. In the meantime, we can have a look at GU. Just quickly send an alert. Oh, wait, we've reached the target. Or the target that is. How does this look? So I mentioned how I don't want to write anything else because I want to change the order from it being episodes to it being topics so that it's easier to search for what I'm looking for so I can work on something that's relevant. So, what does that mean? Well, for instance, I would have, we've just taken liquidity. So, what I can do, search for liquidity. Start from the top, then look for what's relevant. So, we're not on a daily time frame, so we're not looking for this type of liquidity. We have daily lows below an image, which is in line with our weekly direction. Remember, predominantly liquidity being targeted is on the daily. Yes, 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 yes. We understand all those. Perfect. So once we see an event above where liquidity has been taken, we then move on to looking on the smaller time frames to get good clarity on smaller imbalances. Scaling down is okay when we have this event triggered because we can utilize the smaller time frame to get into the move when the larger one has been missed, but the principle is the same. So to summarize, you can see here we've taken buy side liquidity. So let's see in here. We've taken sell side liquidity. If we actually zoom into the chart, that's buy side, that's sell side. So we've just taken sell side liquidity over here. And then we've had a market short to shift. We can enter longs here because first of all, there's a range, which is between buy side and sell side. Once we've taken buy side, that buy side is generally speaking used to target, or sell side, that sell side is used to target buy side. So here we can scale down once we've taken the liquidity. So we've taken liquidity, but we don't even have any buy side marked out on the charts. That's kind of relative equal highs or the sort of that nature. So we don't really have a clean target. That is, we've already filled this fair value gap, the daily high, the daily low of the fair value gap. We've come up to the daily high of it, the high of the fair value gap on the daily time frame. We've just started to use that to kind of head towards this area, which is the swing low, which is where some liquidity will be targeted or at. For reversal trades, you would need a market to shift and buy side liquidity as your target. And bearing in mind with DXY, although we are bullish, this is a 4-hour imbalance. On a daily time frame, we don't have that. We don't have this. We're just in the premium and we're just taking the liquidity from this high over here. So there is some case for buys, for sells as well. So with that being said, I'm not neutral, but I'm willing to enter buys as long as I have a target. Actually, over here, the cleanest, but potentially over there. So we've just Well, it looks like we're about to take this swing high over here. Make this gray. Taking this with a fair value gap or displacement would be a valid market structure shift. On the 1 minute, technically we've had that, but I'd be careful with the 1 minute. So we're going to continue scanning for liquidity to see if there's anything else that tells us about what happens when liquidity has been taken. So in the red circle here, we have a break of this high that came from the push afterwards, but the market structure shift is only valid if we've taken on sell side liquidity first. So a market structure shift must have liquidity taken and a displacement. For sell side is this is acted as a support idea. So the taking of the liquidity to push up is valid. So when we have taken liquidity, we should expect a market structure shift. We're not meant to force it. And there you go. That's the definition of the market shift. We take a previous high or low that was in a downtrend. Well, I think this is in talking about this one here. So we were having a downtrend. We take a previous high from a downtrend, like so. So we're downtrending here. Boom, we're just taking this high. We have had a liquidity sweep over here and a fair value gap to push that high we have here. And then we look for that retracement into that, and then buy towards buy side liquidity. Cool. Same thing with order block. You need that liquidity sweep first. So here we don't actually have the red circle. Blah, blah, blah. Oh, so basically over here, I think where it says buy side, we took out these old highs, but we didn't have a market structure shift back down here. We didn't take out that swing low down here. So we weren't able to enter sells. This is invalid, I believe. Taking liquidity. I don't know what this candlestick is. I'm assuming it's not a fair value gap. And because if that's not a fair value gap, then this pushback is not valid for us to enter this sell. From this is the 2 minute chart. I think I might as well use this high instead of this because it's so close. So once it takes out this high, plus it'll be heading into this fair value gap, there'll be better confirmation. If it doesn't take it out in the manner of which we're looking for, we can't enter the buys anyway. So yeah, that's the displacement range. And I'm expecting to take out the high and then pull back. Excuse me. So over here, you can notice we do not have this clean fair value gap. I want to know if this counts because technically this is a fair value gap and it's within the push. But if you look at the 3 minute, there's none here. So I don't know if that counts or if the whole thing has to be displaced. So there was an example around 20. Here's the fair value gap itself. 1, 2, 3 candles that took it out. This real quick. One, two, three. Every time I see the market shot to shift, it's been the 3 candles that's taken out the high. Not like there's a move, and within that move, there's a fair value gap. That they're taken out of the thing is a market shot to shift. One, two, three. Again, apart the move. So essentially, there's no buy signal here. So why didn't we use this one? Because there's not a displacement there either. There is 1, 2, 3. But I didn't take it out. So he's doing the thing I'm questioning right here. The other one made more sense because the fair value gap was the displacement, was the market share shift. Here, the fair value gap here isn't directly the thing that takes out the low. It's actually 1, 2, 3, and then the following candle. So it's like 1, 2, 3, and the following candle takes out this high right here. So let me see. I'm not entering this. This is just a check. TP will be here anyway. Let's see. It's the very low. Um, What's next? Yep. Okay. Let's go back to. I think direction is key. The idea behind this, so what I'm testing is I'm testing to see. You see this fair value right here is within the discount range, but you can see this swing short-term high over here. This is low. This is low. So this is this swing short-term high. Price displaces downwards, sweeps liquidity. We then displace over here and eventually tail this high. Now this displacement, I'm gonna make this one orange so it's clearer. This displacement isn't directly taking out this high because it peaks at this gray line here or this maroon line here. So it's the following candlestick that actually trades above it. So I don't know if this fair value gap will count towards this as a market structure shift if it comes above this high. So essentially what we're testing is, okay, we've had a liquidity sweep, we've traded above it. Is this a valid entry? So how do I practice? You probably want to enter on a very small amount or a demo account. Now, if I have a demo, let me make a demo account real quick. A demo account. I have to log in. Account. Oh wait, bruh. I have to make a new one. Wait, why do I have a? So my analysis gone. Okay, I found one of my demo accounts. Nice. Markets. Mm. Into the password. Wait, we can maybe get some sell entries here. I'm just deep in it now. Because we know that's bearish. Sorry, hold on. So we just monitor. So we're going to take this as a market shift. There isn't any. I guess there's kind of a displacement here. Displacement here, but that's been filled. Okay, one here maybe. These are some re-entries we can get on the 1 minute. If price was to pull back. The only valid entry we have is here because that's in the premium. 1 second. So let's see. We haven't even finished entering the past, so why would we? So 1, 2, 3, 4, 5. 1, 2. Okay. It's a capital. I hate those capital I's and F's. L, sorry. Lowercase L and uppercase I, like same thing. Oh, it's starting again. Nice. Invalid account. You know, I'm just gonna make a new one. I think we should do 100K because we're going to be doing funded accounts eventually. The USD. Standard account here. This is it. Okay, passwords. Bam, 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 bam. Okay. An invalid account. I literally can see it, and it literally is not. Okay. Being trolled. I'm always being trolled. Wait, which emails do I use? I use this one. Let me have a look at compound because we do compound in direction next. I don't think I'm good enough to cover. So compound is simplified to this statement. If there is a buy signal below bullish or bear or above bearish my target, I can re-enter with lower positions than my initial entry. This low position of compound is due to the idea of a pyramid. That is yep. Bet. So my goal is right here. Why? We established it on the daily time frame. So anything between that's above. So I'm bearish. So anything that's above, since I'm bearish, my target is a lower position than my initial entry. So this is, you can see here, this place. Excuse me. Well, let's emphasis on the displacement leg. Actually, not sure what that is. I'm assuming it's a fair value gap, maybe in a larger time frame. Let me go up a slide. I'm assuming these are fair value gaps in a larger time frame. So fair value gap, push down into it. Let's see the larger time frame real quick. Yep, that's valid. What my stop loss be? So this is only, I think we're going to leave compounding alone because I feel like you can only compound if you have mastered direction. Because this is my target, and obviously it's direction, but I don't know it's going to get there. Remember on DXY, we're bullish up until, where's my analysis going? Or did we take it out? So basically bullish until this area here, the midpoint at least. That's our reason for bullishness, which is obviously going to be bearish here. And you can see there's multiple times you could have got in. Displacement, pullback, enter. Displacement, pullback, enter. Displacement, This is a deep pullback though to the order block. Enter. Displacement for sure. Pullback. Enter. Well, technically, I don't know if this is technically a displacement, but break of the low. Some displacements. This tiny little one is the one we're entering on. I guess that's why you kind of had low hanging fruit, because it can really and truly just, if you're wrong, you're wrong, you know. No two ways about it. In the meantime, I need to still fix this demo account shenanigans. Okay, this is definitely the new one. Make sure, can we make this the last time? Okay. That number. Boom, 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 boom. Yeah, so username down, type of the password. Bam. 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 Boom. Bam. 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 I think. Okay, wow. Okay, we got the account. This is a compound entry. The reasonings for it, starting from the daily, that's what we're going to start doing from now on. We master direction. And also we're going to finish off compound, then we'll do direction afterwards. Yeah, let me do compounds first and I'll explain my reasons. So compound, yep, we understand that. So we expect price to respect order flow because we have the bearish bias. This is the logic behind compound entries. So what that, I remember that lesson was basically talking about how when we encounter bullish candles in a bearish move, those bullish candles act as order blocks or places where price rejects from, and it should never go above those highs. It could, obviously, like you can see here, we push down. When we come up into this bullish candle, which price rejects from. Here we push up to this bullish candle, where price rejects from. Here we push up to this bullish candle, where price should reject from. So that's the idea of the candles. Now, this is the first area where you'll probably be looking to take some off your trade, but we see the failed market on the shift to the upside, the overall target from the larger time frames being here, which kind of fund the idea to enter potential compound entries there. And that is what this on the right hand side is saying. So if I scroll down to 4, okay, so if we want more compound entries, we can get study episode 31. This is a valid compound as we have a fair value gap over here, retracement to such with a swing high. These patterns have reduced risk to the entry. We're saying the swing high is the fair value gap from here to here. I'm assuming it's larger time frame. Push up into it. We have this over here. So you go in over there. Oh, okay. So rather than getting in here, this is the 1 minute. Rather than getting in on the touch, to be fair, you would get in on this blue candle because you would have had this swing high with the low here and the low here. So this one would have been the entry. And it's just essentially making sure that your compound entry is safe because you have the displacement leg, you then have a retracement into the premium, you then have the pull back into a fair value gap, you then have price creating swing high. Was it swing high that said? It was short term high. Swing high. I think it's short term high though. Then you enter in on that third candle after the swing high. And you can see it's at the touch of the fair value gap to enter the sell after the failed market to shift after we took a liquidity, which is a sign the price will probably want to continue down, especially when that's an agreement of your thing. So the counter trade idea would have failed because of the fact that the overall daily bias is over down here, which is the swing term low. Okay, that's going to take forever if we go in a minute. Swing term low of the swing term low, sorry. Where did I get that value, that level from? Okay, there we go. It's this swing term low over here. That's that space, which is our target. I think it's low hanging fruit, in my opinion. And that's the entry there. So whilst we're watching that play out, let's look at what are we looking at? Well, another way to protect yourself was if you're going to consistently do it, to lower the lot sizes as you enter on multiple occasions. I'm going to go through the direction now. Okay, so here it says we know that we get the direction bias from the daily lows and imbalances, which is where we got this over here, this target from, which is why we're bearish. And don't forget that lines up as well, because over here we're using an imbalance. So it's the 4-hour time frame. This is a very strong imbalance, which we've not filled at all. So I think we're going to go up into this before we start looking for sells. Though we are obviously in this premium. We took this liquidity, failed to have a market that shifted downside, which is what I was banking on. We failed with that idea. Pricing is continuing and showing signs that it wants to continue stronger. I think news maybe helped with that. It's meant to go Control Z, not. Unfortunately, we didn't make the account in time. We did enter this on a live account. A very small amount though. That's our target down here. So in theory, we could enter more compounds, but we'd have to follow the law of the pyramid idea where we're risking less because it protects us if price was to reverse. Okay. So I might look for re-entries on my demo account. I don't know if my live account would allow me. Cool. So currently, the only entry we could take is if price was to come to this area here. But with this, I wanted to go down a bit more because I want to use this as an entry if it was to come back up, because it's in line with this blue candle, which is the area where price would reject from or act as a order flow for institutions. And of course, we want this to be in the premium, so price needs to come down to this area for this to then be in the premium, for then price to for us to enter this, and then we can even set a stop loss for it tight like this. We just round it to 4 pips. That'll be another entry towards our target. The reason why we want that to happen is because if we go here and we enter on low hanging fruit, then price is unfortunately not in the thing. But I guess we could technically enter at this place right here. But let's see what price does first, and then we'll see from there. Okay, so direction. So we use the daily lows and highs, which is what we did here, to create our direction bias. We need to be precise about direction. We can't say, price may go there, may go there. That's fine if we have rules. So price may go down here, but it may go and take up liquidity first. So if we're going to enter, we need that liquidity first. And that is a part of the bias, because we can't even enter for sales until we have certain things that allow us to, which is our rule set. So that rule set links the bias. So daily time frame, we're looking for where liquidity is, but you're going to have liquidity above, liquidity below, imbalances above, imbalances below. But how do you know which one's going to go to? Generally speaking, the rule of thumb is whichever one is closer to. But if it was to go opposite, let's say the sell side liquidity, which is below, is closer to price, so we're expecting price to come closer, or move to that one first. We'll move to that one, but we're wrong and we see signs that's going up. We need a rule set for a switch. Now, that is specifically is a bit more intricate. You have to become very familiar with this model to be able to do that, because it's very easy to get drawn into a consistent battle of up and down, up and down, up and down, which you don't want to do. So let me dumb that down a little bit and let's take it a little bit slower, because that's not what we're studying. We're just studying direction, initial direction. Weekly direction is just simply the next candle. Is it likely to go up or down? How we do that, I didn't write it down. Maybe we go back to episode 2 to review that. So again, this is why I want to collate topic by topic rather than episode by episode. So cool. So this day here, we have daily lows below, which is in line with the weekly direction. So predominantly liquidity is being targeted on the daily time frame. So price consolidates, as you can see here, creating these equal highs, and then this low right here is just the range of the consolidation. This low, that high. You can see we create equal lows here. And we take out these low down here. And we get double whammy. We should be expecting that when prices consolidate. So with this idea, we started on daily time frame. We saw the daily consolidation, and we set the limits or the highs and the lows, the range of such. Okay, on the daily time frame. So we've got the direction. When we have consolidation on the daily time frame, we set the equal highs and lows, and then we wait for a sweep of either, which is good because I'm going to take that to AU after this. So in fact, let's take it to AU now, because on the daily time frame, well, I wouldn't say it's actually consolidated. It's just moving lethargically, very slowly. So you can't just enter a sell blindly here, because even if it validates the entry model, the entry model has to be in line with the direction model. You want those two to be in sync. Otherwise, we can just then become a trader that trades everything under the sun. And that is a very stressful strategy, because where's your targets? You know, you can always aim for low hanging fruit, or have a rule of only 1 to 2s, 1 to 3s, which may help. But right now, I'm not testing that because that's just too much. Okay, so direction. If you're good at knowing direction, you can trade afternoons in New York if you have context from the morning. So to trade afternoon, we need 2 things: context from the morning session and a overall direction. So similar to how we entered a little bit later here, we can do this with knowledge of the afternoon session's behavior patterns, as well as context from the morning, and on top of that, the overall target. So we have what? The target, and we have the morning context. So if it was now the afternoon session, we need to understand what lunch hour is doing, what price wants to do at 1:30, etc., etc. We collate all of that again to then create an idea of where price will go. I think with spreads, my entries around this blue line. I think we'll 3 pips. And then to get here's 6 times whatever I see. So spooling is where price keeps offering a price in one direction despite volume. This is stemmed from the philosophy that supply and demand do not move the markets. Okay, that's just information, not really anything practical. So things to implement, we said mark daily lows and highs or imbalances that market is drawn to in line with the weekly direction bias. I think I need to start using the weekly more. Oh wait, that's we've done that. Sorry, that's old news. Okay, so this is the 3 candle formation, also known as the fair value gap. The space is evidence of price only being offered to sell side. And similar to, what to be fair, it's this one here, so sell side. So similar to when you paint a wall and you use a roller downwards, you start with a lot of paint at the top. And as you get further down, you'll see spores or gaps. And the best way to fill them is in going the opposite direction. This is inefficiency of not offering buy side, hence why price wants to return to such areas. Okay, so what do we know? This just helps us understand fair value gaps. So as you can see, this imbalance, price came down here, but price wants to come up here because there was an inefficiency. And we can enter if it gets to the upper limit right here. As soon as it tags that, creates a swing high, we're going to enter that next candle with the stop loss in accordance to where we've put it to then say, okay, that's our entry. So 1.7. I don't know why it restarts. That's annoying. So to determine direction of the next daily candle, we utilize the power of 3: imbalance, external liquidity, and the model itself. So power 3, imbalances, external liquidity, and the model itself. So we can basically like tape read it to determine the likelihood price will head in a specific direction. So in the red circle, we need only 3 candles to create this swing low. So we have that swing low formed because the candles to the left and to the right both have higher lows, which is backed up by the following candle that doesn't take its low, which showcases that it's the confirmation of a power of, or a swing low, sorry, and not a continuation. So this helps us with the start of a reversal. So once we have those candles, we are bullish towards that fair value gap. So this swing low showcases the idea of a reversal. For example, only because I noticed in this, we're bullish, right? At least from here, we're bullish. To here, we're bullish, right? But you'll notice what happens here. 1 candle, 2 candles, 3 candles. So that's the 3 candles. Then we have a swing low. This low is higher than this low. This high is high. Sorry, this high is higher than this low. Excuse me. This low is higher than this low. This low is higher than this low. So with this candlestick that looks like a doji, either candlestick to the sides of it have a higher low than it, which makes this the swing low. You can generally spot them from just looking at the peaks, and generally speaking, to the other sides of them, you'll see the other candlesticks. That's the definition, but that's how you spot it. This is a swing high. This is a swing high because this is high is lower. This high is lower. This is a swing high because this high is lower. This high is lower. So it's easy to spot when you just look for the extremes. And generally speaking, you will see that those tend to be swing highs and swing lows. So once you had this swing low here, bam, 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 that's 3 candlesticks were bullish to a certain point. Remember, here it says so from this point, we are bullish to the fair value gap over here. It's the daily time frame, which is why we use the model itself. And where is it? So in that model itself, I should put in brackets as well, tape reading. That's the truth. Because that swing low is, I guess it's not exactly part of the model itself. It's just helpful for when you take out, have a market just to shift, you want to take out a swing low or swing high, depending if you're bullish or bias, or bearish. You'll need to take out a swing low / a swing high to confirm the market shift, which is embedded into the model, but it's specifically, I'll classify it as tape reading, so it's not confused. So that swing low right here is what fuels the idea of it being bullish. So we should be bullish, but what are we bullish to? Remember, we're not just bullish blindly, we're bullish to something. Maybe these equal highs. So this candlestick here takes out that equal high. So once we've taken out that equal high, you can see we close down here. Maybe now we're bearish because we've reached the target, but we created maybe some liquidity down here, which is almost liquidity here. So from this moment, we could be bearish, and it's bearish until where we have this fair value gap. So we're bearish until this fair value gap, and then from there we will reconvene, and then maybe target lows down here. So here we have that swing. We take all these equal highs. We're bearish up until the midpoint, create this fair value gap. So from here, I'm thinking, okay, I'm bullish maybe, but I'm going to be bearish to bullish. We get that wick. It takes out, it says low, pushes up. So we technically maybe either lose money because we're not bearish all the way to here, or we just don't get entry model because I'll be bearish first. I wish I can go back on this day and see and back test. I go to like the hourly. Ooh, how much is the premium? It's £12.95 a month, dude. Okay, we can kind of back test it. So, wait, what are we looking for? I want to see Friday midnight. Okay. So for context, we have the fair value gap that's been created. It's actually here. Oh, it's actually marked already. This is the fair value gap. I'm expecting price to come down into it to then push up. Why? Wait, were we bullish? Well, here we took out previous high. Can I do two? So even to do two, you need to get premium. Fairs. So I would have probably thought, okay, there's an imbalance here. We're right next to it. I think we'll come to touch it. We did not, in fact, come down. So maybe I would have thought this is the Judas swing. So we have midnight open over here. Okay. Let's go midnight open. And then over, where's 8:30? Two faces of Friday as well. Session open. Midnight open, session open we have. So I was expecting, okay, well, right next to this fair value gap. Why not take this out? That's according to the daily time frame, because on the daily, we created this fair value gap. We took out these equal lows, high, sorry, over here. I think this is the litmus test. Took these equal highs out. I'm expecting price to now come down into this fair value gap. Well, no, if price then from this taking of these highs, we can even start from here. Let's do that. It's about midnight. I think it'll be Wednesday, right? Because we swing low. Closed. Yeah. Yeah, so swing gonna close here. So midnight. Wait, how did it close at that level? It 100% close here on a Tuesday. Tuesday, midnight, it closed here. But it's telling me if it closed at 10, it closed up here. So which is it? So, but you're joking me. All the time I've been using UTC. I've been using Exchange. Wait, what? No, I don't know. I don't know anything anymore. Because okay, I want to UTC makes sense with this. This time London is this. True. But the right. But why isn't the candle changing? I don't like this. This makes me feel weird. This makes me feel so weird. I don't know what. I understand that, but why? What time it was? Because I don't know now if he uses the midnight, use the candlestick for the New York Times, but because midnight opens here. When I was saying Wednesday at midnight is here. What in the reversal was this? Wait, yo, what is that? Where's that even come from? Let's see. I just came to take out some people, I'm guessing. We weren't even able to enter this, which is good. Wait. No. Well, missed the entry for the demo account. Probably actually wouldn't enter that actually. What is this though? Like what caused that? I just think it's random. They just wanted liquidity to take it. To take people that move their stop losses. This is the problem with compound trading is that these types of moves would have taken you out, you know? Like up here you're fine, but over here all of a sudden you're not. Like anyway, let's figure this out. Institutional traders operate on the exchange time. I've been marking the wrong down values. Of course they use exchange. Oh my god. So the midnight's opens have been wrong this whole time. Well, there you guys go. Don't make the same mistake as me. Even okay, wait, let's even go back to where we're at right now. Even okay, so we got it right. But it's better to have it here as what it was. I don't know what. Why doesn't New York show the same? It should be the same, no? It is. So what was the issue? We'd go to the daily time frame. The open. So this is wait. The close of the day is that blue with this blue. So the cross is the. Does that make sense now? It's saying the close down here. If I go to exchange. And it closed here, but actually draw it out. So here, why is that different? Might be bugging. Why is the daily close different to the midnight close on a smaller time frame? The exchange time zone. Just thinking I have separated them, but I haven't. Even when your training view chart is set to exchange time, the daily close midnight do not match because it officially ends the day before midnight. Business sequence, chronological time. So this should be 4 p.m. What day? Tuesday, right? Wait. So it closes at 4 p.m. So go back to the daily. This is a Tuesday. So this Tuesday, 4 p.m. is what they're saying. Tuesday, 4 p.m. Right here. And lo and behold, it's right there. Interesting. Oh, wait. That's the same as. Oh, you know what's so confusing? Because GMT, that's 10 p.m. So at 10 p.m. close is the midnight close. So for New York time, it's 4 p.m. Okay, that makes sense. Just a little bit different. Okay, I'm understanding now. Okay. What are we doing? Oh yeah, we was trying to do price action in the past. So this is the swing low. We want to analyze this day, Wednesday, and Thursday, and then Friday. So Wednesday, Thursday, Friday. Wednesday is the day of which. So it's the minute open. This is 8:30, and this is essentially the time where it took out these equal highs over here, which isn't really like that obvious. It's why these are 2 different days. There's some people probably mark up. So this is the 10 p.m. in GMT / 4 p.m., 5 p.m. open, 4 p.m. close. They're on about. Okay, so we trade. So this is the high of the day. This is the low of the day. So that's the daily range. Then the next day, you end up here. And then the other day. So 1, 2, 3. This is the creation of the fair value gap. It was created here. So the high of the doji day, the deliverance of the following day, and then the close of that following day marks this. So we hadn't dipped into this area until now, but it's been fairly traded now. So this initial, okay, I'm gaining more understanding. So from here, this is the end of the day that created the second candle, which is the swing lows. The swing low, then this candle, this candle. That's where the heads and shoulders comes from. Bam, bam, bam. But that's useless unless you have time involved. Anyway, Tuesday. So after that high, we create the bottom of the fair value gap, but we don't know that yet. So that's the high. We take out yesterday's high. Push up all the way to here, these equal highs. Push back down, retest this equal high. So they're a little bit push up. Okay, from the midnight open. We trade up, swing low, push up. So that's the power three. Midnight, it's around 4 a.m. It's London session open. We then push up. So this is how you can start to trade the London session. Because this would be 5 hours behind. So this swing happened at 8:30 my time. So I'm in London. This is 8:30 a.m. move. Just came back into this fair value gap, which is the Judah swing. Then delivered price to these equal highs over here. Okay. Then that ended up closing. But then it was in a New York session. In the context of New York session, we've already delivered to this target. We have this imbalance. I'll probably be targeting this imbalance. We open here. So this high. We have this fair value gap. We trade into it. We don't fully deliver, but we trade, consolidate a little bit. This is the high of the fair value gap. Use this, the high of the fair, or the consolidation. And this is the low of the consolidation. So we have this consolidation, which is in this fair value gap. We create equal highs here, equal lows here. So equal lows first, equal highs. So once we have that equal highs, what does price do? It sweeps the above, so the buy side liquidity. After it sweeps, consolidates, creates these equal lows. We take those equal lows and we displace to the other side to take these lows down here. But this fueled the idea to this fair value gap. And then this fair value gap was used, was created here. So this imbalance actually didn't exist. So we can't say that we're targeting this fair value gap because it wasn't yet existed. It actually existed from that point. So is there a way to see a potential fair value gap forming from 2 days? Maybe, what if you had one candle, two candle, bam. What we don't know is that this could be anywhere. So while there is yet a bullish candle, this determines where this is. So if we select both, but you can't move both. So depending on where this closes, depends where the fair value is formed. So maybe we know that price would have to go up here, or if it doesn't, we then have a fair value gap. So because of that, we think price is trying to offer. So we have two candles, maybe the third one, then we assume doing that. But that is a early theory, which would have to go through a rigorous testing for me to properly utilize. Let me see if there's actually any entries now. So this extreme, realistically, is from here to here. And within that range, Technically can't use that anymore. No, I won't use that to target better skill sets. Okay, let's go back to what I was looking at earlier. Okay, so we then create this fair value up. So we sweep, sweep. Normally when we get this double sweep, is sweep, sweep, and then we push up. This one it swept, came down to this area, created a fair value gap, then pushed up. So I would have expected wait. Because we analyzed this and said that from this open, the open's actually over here. So we opened here, traded up, back into the fair value gap. So we didn't trade. This wasn't the open. So traded back into this fair value gap for midnight. So midnight open, push up, trade back into fair value gap to then go up and displace upwards. At 8:30 in the morning, we open. Trade down into this fair value gap, trade up. Then we take equal highs, but we did take the open high. Trade deeper into the fair value gap, taking these lows, consolidate. Then we create an equal high with the high that took the session high. So we create an equal high over here, consolidate, come back into the equilibrium. Maybe even argue this is a sell opportunity. The idea that we've taken this high out, trade into the equilibrium of the range. Are we to know that this is a because I've seen him take trades where he'll trade it to the equilibrium. I don't know if that's enough. Like, is this enough to say this is a consolidation range? I don't know. Let me go zoom in on that area. To displace upwards, kind of take out this high. Idea how to change time frame, keep in the same place, trading view. Save chart left edge position, scale lines tab. Yes. So that means that now, let's zoom in this area here. Let's change to 3 minutes. Good. That was so annoying, dragging all the way across. Okay, so the 3 minute on this range here. Wait, what's this for? Oh, this is just the area we wanted to watch. What do I notice? Well, after we took this high, none of these are swing lows for me, at least on this time frame. Boo hoo. Oh. Okay. Okay, this is the smallest we can go. That's annoying. Anyway, swing low would be here. All right. We take this out, we trade above it here. So we then have a range from this high, this area here. You can even do a tighter one from here to. I'll use this one. I'll probably use this swing right here. And what do you know? We trade to the equilibrium, which is this fair value gap here. And if we used this ultimate one here, we wouldn't have got an entry because this is below premium. If we use this one move, from this swing high to this swing low right here, we can then see that this fair value gap would have allowed the entry. You would have put your stop loss above here. And where would you have targeted? Maybe these equal lows. But we then actually took out these equal lows. And that utilized the premium. We could have got in here as well. Why? Because we just had a liquidity sweep and a market shift. We just didn't get a pullback. So sweeped, pushed up, but no pullback. Okay. So the optimal trade would have been this. Okay. So if you go, so used to price like resetting every time you change the time frame. Okay, so this fair value gap anyway, we open over here, we trade into it, create this consolidation range. When we sweep the highs, we come back into that range by taking out these swing lows right here. We take out this swing low, we trade that up below the swing low here, create a swing low over here. Then we pull back into, let's find out. So we swept these highs, created equal highs over here. So I have this range. We have another consolidation range here. So we sweep here. Which within this own range, we didn't get the market shift, which is kind of like what we're seeing now. You didn't get the market shift, so we don't think it's a continuation. This sweep, took over these lows here. We didn't get that sweep, so we can say, okay, continuation ideas. What do we see? Well, we didn't take this liquidity, but we did sweep this liquidity here. So looking for areas. Oh, this is a fib. From here to here, we notice that this fair value gap falls in that range, and we can enter a short on the retest. And of course, first those contributing to the fair value gap, a little bit of spread would target our entries, of which we would simply just be aiming for the bottom of the range for the original consolidation, which price was aggressively delivered to. So after that point, we should be expecting price. Well, we don't have the fair value gap yet, so this would have been our target for sure. We're not aiming here, but then once this has happened, we finish for the day. Thursday closes actually down here. Once it closes, the daily candle creates this fair value gap. So from here onwards, well, we don't start from midnight. Is that like 5 a.m. my time? We open here. Sweep the low. This low and this low here. Push up. So I would have been expecting this to be all part of the bullish lies, because I'm thinking about this daily fair value gap. So we create it here, open here. Session open is here. And we push up. To be fair, we do have this untapped equal highs, which I guess would have been targeted from this point onwards. Midnight reaches it, creates the equal low. I'm thinking 100% from the open, that price is going to take this out. We have this fair value gap. We already know this is below the range. You know exactly certain, but our entry will be around here, stop loss about here. Maybe we don't take this trade. See a small time frame. Woman to show. Okay, so this open. Let's say we sweep low first, push up, create these equal highs. Come back here. You can actually utilize this order block instead. This for value up, I think. Deep red. And so your stop loss would be here, which makes this a better entry. As soon as it touches it, bam, pretty much goes to delivery. 1 to 2. But it only trades 0.3 pips above it, so this doesn't classify as a sweep, which is why we see it still as an equal high, which is why we can target it. Trade a little bit above it, come back down to this equilibrium, this order block, almost down here. Come back to this equilibrium again. There we go. We start to form equal lows and equal highs. We sweep above, come back down into this fair value gap. We push up again. And you just keep going up. And we open. From here to here, we have a big thingy. So midnight open. Trade down. So have this side of the fair value gap or the imbalance here. These gray lines are irrelevant, I believe. This is an old order block, which also is irrelevant. Don't remember what that's from. So push down, come up to the rest of this imbalance, which now only has a little bit left. 8:30 opens here. We trade down, taking out these lows into this fair value gap, push up to fill the rest of this imbalance. Push back into this old fair value gap. This is where we start looking for entries, I think. 3 market short shift. Yeah, but we don't pull back into it for a while. We just go straight up. Highs equal lows, range. Sweep the low. Kind of break market structure, but it might have been a loss. But on the daily time frame, would be looking for at that point price to come down. Okay, there's a lot of drawings. Let's what's going on with price? All the way back up to entry. I have no clue what's the move is. I actually don't know which one I prefer. I think live is better this way, and pass is better the other way. It just saves right, isn't it? It just doesn't save anything at all. Okay, cool. Okay, we'll just see where this ends up. I think we did a little bit of studying for now. We're going to still work on direction. I really want to for a couple of days, and then as we continue going over direction, we can then continue improving and go from there. But that's it for today. I need to eat and then I have other things to prepare for. So I'll catch you guys tomorrow. And this has been your boy CJ. Peace.